Look at that. Still going. Yeah. Dwayne, you can see me on YouTube right now. Just click on the link. Actually, I don't understand, Austin, why it didn't pop up in the room. Typically, when I'm streaming, it would come uh, into the room there. So I'm not sure what's going on there. Yeah. Yes, Bucky. Let me send that to you, my friend. Give me 1 second, man. So, yeah, hey guys, if you have the PMZ, I can't do it right now because I'm really busy. But if you need the trendy allocation PMZ indicator, you have to have the PMZ. So I have to double check and make sure you have the PMZ before I give it to you. But that's the one that tells you like how many delta options you can buy using the PMZ ranges, or how much equity you can use, and you can choose 1%, 2% of your count, 5%. It just kind of depends. It's really cool. Cool tool if you got the PMZ. If you don't have it and you bought the PMZ, direct message me now and then I'll check. And then later on tonight, I'll send that to you. Okay. Yeah. Typically, Dwayne, it comes into main chat. I don't know why. Do you know, Austin? I think I'm streaming on YouTube right now. It should have popped up into main chat to let everyone know. Okay, cool. I don't know why it didn't work. It's all good though. 7270. Oh, there it is. Cool, cool. I thought I did. Hmm. All right, so as I was saying, so I've drew these arrows, okay? So the long trade is out of the PMZ. We're almost to the trendy edge. Just so everybody knows, the trendy edge is a playing field of supply and demand. Does everybody understand that? It's a playing field. It doesn't have to be exact. Many people who have been here for many years know there are times that it's like spot on, many, many times. But I need you to understand it's a playing field. So you don't, when you start to get in this area, you just want to be careful, right, as we're moving along. When I say careful, it simply means we're using the process of, this pivot low. You could come down here and go, hey, as long as it can hold the 23 and 38, I'm staying long. I don't want to go short. You can see that the 23.6 in this case, we have a little bit of inside and up, but the nicer like demand level, if you will, is down here towards the PMZ again. So for some reason, just want to make sure everybody's clear on this. For some reason, if we head back down here today, all right, towards this area, I'll be looking to buy those SPX butterflies to the upside. Okay. Now, what if we blow through the edge? This is why I give you multiple time frames. Everybody's different. So the members who come in here today who say, I'm just going to trade the PMZ, you know, my overall coaching this morning was, hey, wait for buy the dip. I didn't say short, none of that, right? Been bullish on this move. So notice that the price came down to the line in the sand, another indicator that you guys get, right? And you can see this started out as what we call a positive neutral. Okay. Price broke down. It came swiftly into the line in the sand. It went bid. And just to be very transparent, even if you were thinking about shorting, I mean, if you're quick, sure, you take the short here, you cover here. For me, I probably would have been waiting for a close of the candle if I were thinking about going short. And then by the time this thing closes, your risk to reward sucks. So you don't take the trade. wait for the break of the PMZ, boom, the rest is history, right? Your risk today was 3.25, and so far, not, this is hypothetical that you would actually hold, and some of you can, but 3997 all the way into the trendy edge at 4020, that is a huge reward for the small risk, and that's what the PMZ is all about. All right. It really is. It's about understanding that your risk to reward by looking at the levels that are given to you on the chart help you understand what your trade plan looks like. You already know, because I teach you how to trade this, how to trade it. Now you just got to put it to work. Execution there, stops under here, targets, automated target here. So we've just been kind of waiting for this. And you notice we come over here on the 4 hour. Again, these arrows are what I would like to see. Obviously, I'm net long, but this is what I'd like to see is for the market to kind of pull back into this zone, maybe towards the end of the day, and then I'll buy SPX butterflies to the upside. Now, what if towards the end of the day, we're floating around in this area? Then there's a potential that I have to buy SPX butterflies maybe at the 4008 level or up here at 4020. It just kind of depends. I won't put those on until about 2 hours before the close. And that's only if the setup is there. We had 3 or 4 SPX trades last week that all, I think, produced over 100%. And those worked well, just kind of doing the same kind of setup. You don't need to chase it. We don't want to get in butterflies in the beginning, like in the morning. It doesn't make any sense to me because it is just too crazy. All right, so let's just kind of hold. But also for anybody that's having a hard time, that's reluctant to go to the upside. Now, let's look at the bigger picture. That's where things get really important, right? The big picture is this: inside and down, inside and down, inside and down. We're there right now. We're coming very close. This is what I mean. This is a playing field of supply. And you guys know inside and downs are the identifier of a supply zone. And your trendy edge is in that zone. Okay. Your future edge is actually projecting as of right now. If we stall here, we could go inside and down. And then let's just say this were to happen, then your future edge is identifying the new zone. All right, pretty neat. All right, the next thing would be, let's come over here to SPY and QQQ. This is your neutral strategy. We talked about this in the BMA this week. I said this only happens every once in a while here at Trendy Trading, where I'm going to use the same blueprint as I had the previous week. Almost every single weekend, I change this blueprint for you. But the charts told me, hey, let's keep these levels. Okay, boom. Look, we take over the 283 level. We hit T1. Your next target is 287.93. Your support is 284.85. Also, because we were coming up into 396.27 today, I specifically said in the BMA, and I hope you watched it. If you didn't, it's not too late. Watch it tonight. I said this level here was going to be your support. If we gapped over, we get over it. And then I said your resistance was right here at the trendy edge. Pretty neat, right? So again, these levels are very important. We can see that last week they worked very well. Today, if for some reason this market wants to, go ham, then that 399 again, 400 level is going to be really important for us to continue this trend. Now, it's a little euphoric, but that brings me to my next thing to talk about, and that is, looking at the skew. I said, back then, if you were to look at the history of the market, every time we come into this red line, it's a huge move to the upside. I don't care what news is telling you. This is the probabilities. Hedge funds are gearing up for a risk-on environment. You have to understand that the market pulled back here. So if you're super bearish right here, look at it. You got to face it. You're super bearish down at the bottom, and now the market is kind of picking up and pushing into potential resistance coming up. So, I'm hedged 6 months out, and that hedge itself is beat up, but it's not for me. It's not one of those things where I look every day and go, oh man, it's more about being prepared. I think that the market, and I've been saying this for weeks, in order for it to get euphoric, you guys know how it is, your neighbor, your cab driver, this is true. They start, calling you up, asking you what they can do to make money. The market's safe now. And most likely, when they do that, this skew is going to be upwards around 135 to 145. This would be extreme euphoria. Okay. And what happens if you were to put a SPY chart behind this, the SPY is actually moving to the upside. Okay. Now, if you come over here to fear and greed and you pull this up, what would happen as well is when that skew starts to, push up to those levels, you're going to see this bad boy go to extreme greed. All right. Remember, this is where all of us, I mean, including me, you'll find yourself talking and you're just like, what did I just say? You just like, you blacked out, your eyes closed, and all you can see is money. Just remember, smarter traders who have been around a long time, this is called discipline. We get in here, you start to be a little bit more disciplined. You bring those stops up. There's a lot of things you do. You want to be careful as we hit these extreme euphoric areas. Okay. Now, timing is the variable because, you could go short and get run over just because all these things are lining up. So I learned this from John Carter actually when he used to talk about the skew. All right. And this is a timing thing. It's a timing is the variable. So when we trade off of this, just like we went long our portfolio down here, we don't know the timing. What we do know is the probability suggests that the market will go to the upside, but it can happen anywhere between like a week to all the way to like a month, right? So you can be early to the game. What I found is by introducing supply and demand to this strategy, I actually can reduce that time exposure. So when all of my things line up, boom, the market's coming into demand, right? And people are scared, everybody's on the put side, participants can't see anything but fear, and then the skews down here, we're typically about 1 week to a couple days early, but we're on the right side. That's what I'm seeing. Okay. That's the big piece to the puzzle, in my opinion, is that the majority of traders are missing out supply and demand. If you don't know supply and demand, now you do, you're here, you're listening, you're in the right place. This is where you want to learn about this. Okay. This is going to help you. Now, one thing I want to make very clear, I don't promise profits. I'm not a hedge fund. I'm not trading your money. I can give you all the tools in the world, and Melissa and I can come up here and bang out trades left and right, right? You guys have seen that. Banging out trades left and right. Just because you see this does not mean that you're going to make money. Alerts for me are proof of concept. Matter of fact, you know, you can still have a winning day that looks like this and still not make money because in the background, you could be hedged and your hedge is killing you. So I just want everybody to know the reason why I have alerts that come straight from my API to you in milliseconds is to show you proof of concept so that you understand when I'm buying AMD and I'm adding down at levels and then they start to work out and then you get to see, hey, he closed that for 180%, man. He added down here like at 70 cents, he closed at 269. That worked out. Sometimes you're going to see that I add maybe in a spot or I go long and it doesn't work out. That's also going to be annotated up here, okay? Which is really neat because it's real. It's coming straight from my account. Melissa, it's coming straight from her account. Guys, you could see there's a lot of wins in here. But again, proof of concept, it's the only reason why we share these trades is so that you can see what we're saying, what we're teaching, we're actually doing. And the only way you're going to learn anything is by executing the trade. You can watch all you want. And as much as I like to sit here and tell you that watching is great, maybe for a little bit, but that does nothing for your execution. It does nothing for your management of trades. Nothing. Because, man, when you get behind the wheel and you're dealing with a loss or you're dealing with a win, how you react, all those days of watching and all the preparation that you did for this trade, it changes, right? It changes drastically. So I've always told people, you got to execute. But before you execute, always know what you're going to lose. Okay? Anyways, That's my rant for the morning. You like it? All right. We just keep pushing up here. Heck yeah. Good job, Chris. 170% on those Googles. Very nice, man. Yeah. Yeah, T-Camp. So that's a big factor too, man. So I used to really follow the VIX, but I just have never really needed it. But when somebody brings it up, I'll take a look, and you're exactly right, man. If the VIX is on the low side, but the question is what's really interesting if we study the VIX, okay? So let me pull up the VIX real quick on my trading view. What's really neat is that you can use the edges. It's super cool. So I could pull up the past edges, but for these purposes, I went over this on the BMA. See how we came right into the edge here and then we popped into the cloud? Do you see that? So, um, Chris, I don't like you anymore. Just kidding. Good job, man. Not easy to do. But I don't know if you could see this, but your edges are working. So when you use the trendy methodology, you go long at the lower edges, right? And you want to get out of your longs at the cloud or the edges above. Okay. So in this case, we're right at the edge, right? Right at the edge. So we popped into the cloud last week. And what does this tell you guys? Think about this for a second. If I were long in the market and the price of the VIX was coming into the edge, what do we do? Can anybody answer that? So if you are long in your portfolio and say it's like the middle of the morning or something and we're doing great and the VIX is pulling back to the bottom, right? Down here towards the edge, what do you do? Now, right now, folks, on our Netflix off subject, our Netflix is up 80%. We basically have paid for that earnings trade, just so you know. So if you're leaning on the bull side and you bought more contracts on the call side, this is where you trim. Then your trade becomes free. Pretty neat, right? So I showed you guys how to do those debit spreads using levels going into earnings. We were bullish on Netflix, so we bought 20 plus days out. And then to protect us, we bought that week's expiration for the put debit spread, which is pretty neat. Okay. You guys can hear me right now or no? Okay, cool. So what you do is exactly what you said, Benji. When price is coming down into the VIX, we want to be careful on our longs. Okay. So right now, like we're at the ME, and if I were to switch over and look really quick, we're right up here towards these kind of nosebleed areas, right? It starts to get a little euphoric. I'm sure a lot of bears, anybody that's like having a hard time not trading, this is where revenge kicks in and you're like, yeah, I got to go short, man. This isn't right. It doesn't feel right. But what I would encourage you to do is not try to think too much. Just pull out your handy dandy Fibonacci tool and just measure the move, folks. All right. It's if this, then that. If price can hold the 23, stay long. If price can hold the trendy edge, stay long. Like, there's no reason to try and speculate what price is going to do. That's for your ego. All right. I promise you. And if you're in here, we're a team, right? We're not out here trying to compete against anybody. Like, I don't care who's right and that type of stuff. And I hope that you don't care, right? It's all about us making money together, having an edge over the market, using an edge to get above our opponents. Everybody out there that's outside of these doors are basically people that we're trading against. What is our edge? Our edge is being able to take all these different things and synergistically put them together and understand, boom, we're coming into resistance. The VIX is at an edge, all these type of things. So we're pulling up our stops. You're trimming, right? You're having a good time. All right. Hey, Melissa, I am supposed to be there, but it's 9:30 right now. Is that what you're saying? Are you still on? Is Tennessee? What is Tennessee time? God, you just scared me. I'm like, wait a minute. Spring forward. Like, did I mess up? Now, if I'm a bull and I'm coming into an area where I'm like, man, it does feel a little extreme here on the lower time frames. What kind of position could I put on? Me personally, okay, what would I do? Maybe sell some call credit spreads, right? That way, if you're wrong, you could buy back the call, something like that, you know. Yeah, so just to Roberto on UAL shares for me, I have areas where I want to add. I'm gonna kind of follow the idea that Melissa had for his maybe a swing position. I do know that it's under the weekly edge, so I'm not a huge fan of it, but I'll add a couple times, and if it can keep the lower weekly edge, then I'll look at you know staying in staying in the position. It's 399. Sure does feel like people want 400, doesn't it? The question is it 400 later on the day? Do I get an opportunity to make a little money to the downside right here? What do you do? So I'm going to try a credit spread here. Okay. 165%. Boom. On Google. Yes, ma'am. Uh huh. Okay. Nice. Very good job. You guys got to use some of the other emojis too, right? Like, they're fun. Like the one that says, oh, it's fun. You got these beautiful pictures of me. You can put those on there. Yeah, I actually have, Roberto, I actually have my ads down at the lower trendy edge. Sorry, on the daily. So I was contemplating adding right here at the mid where UAL is actually bouncing, which would have been nice right away because it bounced perfectly, man. The only thing, like, my biggest thing is I just keep telling myself only add at the levels, right? No speculation, just try to add at the levels. So, but I have my ad down here at the lower daily edge, just in case the market wants to pull back there. Okay. Actually, this is what I'm going to do. I'm going to close this and I'm going to wait for a pullback and I hope I get one. So this was the add-on that we did. We'll see if I'm right, but close and we'll wait to buy the call into earnings on a pullback. Hopefully we get a pullback. Mhm. And Spotify was another one that I wanted to take last week and woke up this morning and saw it was up, but it's pulled back, I think, quite a bit. I'm going to take a look at it really quick. Still like it. Shop has been a big one from our trade plan from last week. I think on Spotify, I'd much rather see it come back to 97 to 95 before I buy it, but it's worked really well. And it's been up for quite some time. That's another thing I would recommend to you guys is make sure you look on the 5 minute charts before you trade a PMZ trade at the last several days. If it's been, moving that cycle 3+ days, you might want to hold off. I am going to do something a little bit more fun here and do Netflix on a pool. I want to buy this week. Who's reporting this week? I mean, we have our bigger names, I think, next week. right down here. Let me look at Netflix just really quick. Yeah, hit that first target. 387. I'm gonna go with, I want to say, when are Amazon and those guys reporting? 2-2. Yeah. So 2-2. That's right there. All right, so our SPY, whether you followed me on the SPY credit or SPX, it doesn't matter. All right, we use the blueprint of the ES for all of that. Any new traders in here have questions, or even any older traders who have been here for a while? Again, we're just using the ES blueprint as a guide. And I'd like to see, I'd like to cover down at 4016 to 4010, somewhere in here. So it'd be like this. All right, so I'm gonna heat up my coffee, take a little break. So far, it's been a good morning. On equity, I have an add in for UAL if it gets down to the lower edge. And typically on equity, I'll add 3 times um, for a swing position. I'll be right back. Hey guys, already we are already making money on this SPY. So when I bought it back, does everybody understand this? When I bought it back, it was up 30 something percent. We're up 143%. We are profitable on this trade. I am going to close. Boom. Let's go. I'm gonna put stops at 171. Oh shit. Okay. Forgot to hit enter. So this trade might have been confusing for anybody that doesn't do this type of stuff. This trade might have been confusing. Dude, this market is crazy. You know, give T-Camp some credit here with what he's talking about. I do believe it's getting euphoric, but I also think that there's a lot of pain that can still happen. Remember 2 or 3 weeks I was talking about um, the market, basically into earnings? It gets difficult. You either pull back really hard into earnings and you're like, what is going on here? Like we haven't even heard any of the financials, right? We have no idea what these guys are going to report. So it kind of puts you in a sentiment where you're like afraid to buy the dip. You're like, oh my God, like the reports must be horrible. And then in this case, we don't even know what's happening and the market's ripping to the upside. So if we just look at the higher time frame, okay, going back and measuring 2000 and here, let's go back. I want to look at this really quick. Look how close AMD is. So really quick, let's see here. Give me 1 second. I want to show T-Camp this because this is important. Let me pull up. Let's pull up SPY and let's go to. This is the only part that I would disagree with you is going over here to the quarterly. Okay. This is why I keep showing this. So a downtrend for many people, it's always different, right? So just here specifically, not about anything else. For me, if we take the range and we measure here with Fibonacci's, right? And we measure this and we come back and take a look here from this level, we're literally above the 38.2. That's the part for me, man, that we're not in a bear market. Were we? I mean, even if I look back here, I think we did break below the 38.2. Yeah, we come all the way down to the 50. So this is for me. So I don't know about like what a broker would say or anything like that, but man, this is the part even from an intraday perspective when we are trading the trend, if it doesn't break the 38.2, then for me, we stay bullish. So I have to apply that to all time frames. So I talked to Dex in here, who has a very robust background in this type of stuff. And I want to tell you, for me, what felt bearish is that the names that I always go to, they got hammered 60, 70% down. And I feel like the market was trying to trick me after I talked to him. I'm like, you know what? You're right. Because he was like, man, there are a ton of stocks that aren't even being hit. You're just concentrating on the stuff that you're used to looking at. And then I started to look around. I'm like, man, that's true. There's a lot of sectors that I'm unfamiliar with that were doing really, really well. And so the SPY and everything is actually holding up against all the odds. That's the part that's hard for me, anyways. Does that make sense? That's the part that's hard. Now, I will say, as far as today, I was a little early on my credit spreads, but I really feel like we're getting close in here. This is kind of crazy. I, what I say this morning, I don't think we'll see 70%, and now here I am, or sorry, 70 points, and here we are, you know, like literally up here at 50 points. This is very extended on a short time frame. But hey, but check this out. Look at the look at the inside and up on the weekly. Seriously, right? This is the part where like it's hard. You know, you feel like it might be extended, but then you come over here and you look at the weekly and it's like, but it just looks like it's starting from a weekly inside and up. And then when you go all the way back, okay, remember we broke out of this channel that felt like purgatory, and then you go all the way back to the supply zone. This is a channel in here, folks. We really haven't done anything. So, I mean, my biggest thing is like, I don't think anybody should be bearish or bullish. We're literally sideways. But all we're trying to do is come in here on the weekly and trade the lower end of that box and be careful on the upper end of that box. This year, we're going to do it. This year, let's do just it. T Camp brings up a really good point, guys. I mean, seriously, he's bringing up a really good point about the downside. The upside is so much easier, isn't it? Because what's going to happen is we are going to get euphoric. And so we talk about this so that we can at least like be able to take it in and go, okay, maybe we are being a little euphoric, right? And be prepared for the downside. So if you notice in my portfolio, and I'm pretty sure on Melissa's side as well, we're trying to be as careful as possible, meaning we're long when I feel like we should be long, and we're trimming and pulling stops up. Now, I'll tell you in 2021, the problem was back then, and this was a big problem in a lot of services, is that all the conditions told us to be short, and the market just kept going up and up and up. The skew was way off balance. Everything was off balance. What I found, right? And it specifically what you see through what Melissa's doing, right? With just PMZs, what I hope you guys can see is if we just concentrate on the day to day and like leave it to the broad market analysis, meaning like I'm not saying what I say is bought, like it has to happen. I'm wrong sometimes. All right. But what I'm saying is if we just watch the broad market analysis, have an idea what the weekly is going to give us, and then we come in every day and just concentrate on a couple stocks, that's where I want your mind, where your head needs to be, right? Just make money. Because all the like thoughts about what the market should do and what it's not doing, it has to mess up your trading. Am I right? I know this. I'm not going to say any names, not in here, but this happened in a service for the whole year of 2021. It literally messed me up. I have a friend right now, okay? Matter of fact, we go over here real quick. I won't say any names. Yes, okay? I have a friend right now, had to check in, that on days like today and on Friday, they're trying to short the market, folks. Okay? Do you understand that? They're trying to short. What I have found is what I am teaching you. The proof of concept is there. You can't argue the fact. You can't argue that the last, several trades, we are up in the probably 85 percentile of winning trades right now. The levels are working. But if you're the type of person, right, like my buddy, on an up day, like right now, they have not taken one trade. They shorted on Friday. They added into their short on Friday. And now they're getting hammered. Instead of just saying, price went over the PMZ, my risk is 3.5 points, I'm going long. Do you guys see what I'm saying? The only thing that is going to help me is just to trade my process. That is true too. So the timing is a variable, T-Camp. So on your end, we're getting up here. Okay, so T-Camp, I think you're listening. We're on an inside and up on the weekly. Okay, so just hear me out. Everything else was just kind of moving, right? It's not been an easy move up. If you guys watch the BMA, it's not an easy move up. It's not like it's been easy. It's literally pulled back really hard, and then you had to have levels to buy off of, right? So, in your opinion, where we are right now, looking at my charts and using trendy methodology, we don't know if a news catalyst is going to come out. Like, we're not that good, right? We have no idea. But if I look up and to the left, the only thing that I can go off of is this supply zone. And the coaching that was provided has helped us get to where we are right now. My coaching going forward looks like this. This level right here that says bulls need. All right. And I'm going to get to his comment about like, elevator down, I think is what he's trying to say. Okay. What happens is I can be right here looking at the methodology and going, man, the weekly's an inside and up. We're above the cloud. We're looking up and to the left. We see these levels. We got a long ways to go. Matter of fact, 4,000, let's just say 4,135, okay, around the mid. Current price is at 4,045. That's 100 more points. That's 10 more dollars in the SPY. That's what my methodology says, not anybody else's. That's it. The issue, and it is very important to bring up, is the fact that if something drops, we have no way to prepare for it. It could literally come out in the next 30 minutes and do this. Everybody agree with that? Right? So what do we do? All we can do is try to be really good stewards of our money. That's all. All right. And if we're wrong, then we try not to be wrong for too long. Right. That would be a great goal for 2023. Right. Now, also, when do I want to start layering into the put side of things? When things start to feel extended, right? So what you have to do as far as homework, like say you made money today, you're going to sit back and you're going to go over, all right, to your charts, and I want you to start looking. Are we coming into supply zones on the 4 hour and the daily? Stuff like that. And then look at the history. Okay, over the last 10 days, this is just hypothetical, shop has went up 35%. And we're coming into supply. ES feels a little extended. Those type of things. What kind of layered approach can we do? We could try to do put debit spreads. Now, again, if you guys can't do credit spreads or debit spreads and you got at least $25,000 in your account, I would really highly encourage you to reach out to your broker. Because what I can do is I could come out here and go, man, market feels like it's getting a little heavy, maybe Netflix or something like that. Jesus, Netflix is up 16. I'm just going to ignore that. Wow. And you can start buying debit spreads because your risk to reward, right? It's really nice to approach it that way. Okay. Now, Apple, I'm gonna have to say, man, this is the thing. The supply and demand, okay, says 148 all over it. This is the ACDC, folks. Now, the issue is if they report, they could gap right into 148. Look at this. Boom. Inside and down. There's an edge right underneath there. There's the purple, the blue. 147 by 154. Wow. This is crazy. Hey, Melissa, are you on the mic? This Apple is just, this ACDC is beautiful. If this thing pulls back to the accelerator, I'm buying 148s, man. Or at least I'm going for that. That's crazy. So I'd say right there, right there. That's crazy, man. Ooh. All right, so I have, let's see here. I think I'm in the options room in about 6 minutes. So I need to use the bathroom, grab some water, talk to my wife, and then that's about it. Oh man. All right, everybody. Mic check. How's everybody doing? Good morning. Good morning. Sorry about the delay there, just for a few seconds. Trying to get some things worked out. Hey, good morning, folks. Good morning. Let's go ahead and get started. So again, I am a supply and demand trader. So everything that I'm showing you today, I'll be talking about supply and demand for the most part. I like to use some Fibonacci with my trades and kind of help you guys, coach you through kind of what I saw today and go over some of the trades that I took as well to kind of help you guys and guide you through your day. Once I get done with that, so again, the itinerary basically is ES futures. That's what I use to guide my portfolio. So basically, if I'm looking for prices to move up into supply zones, we'll calculate those points. It kind of gives me an idea how long I want to hold on to my long positions. Okay, and if we're coming into supply, it doesn't mean that we necessarily go short. It just means that we pull those stops up and we get, basically a little cautious on the day. Okay, so let's go ahead and get started with our ES futures. Sorry, I was checking out Apple. Well, you know what? Before we even go there, just so you guys know, we can go over this in a few minutes, but Apple is really making its move just like we wanted it to. We're looking for 147 by 154. This kind of like raises a little bit of hesitation because it's coming into earnings. I get that. For right now, as far as the week is concerned, as long as we can hold 136, this is looking really good to the upside. If we were to pull back to 136, I'd be looking at buying that dip, providing we're not in earnings. But far as today is concerned, what I want to go ahead and do is let's measure. We're coming right into an EMA. That could cause some, delay here. And we're coming into the euro close, so this makes a lot of sense to me. The 23.6 and the 38.2, I've shown you guys this plenty of times. For the intraday, so meaning just today, if we can hold 141.5 by 140.81, I believe price can continue to move up. But right now we are at resistance. Everybody see that? Let's go ahead and zoom in. You got a part of your EMA cloud. See these EMAs right here? Each one of these you can actually use as a target. And right now we're coming into that second EMA. So a little bit of hesitation is what I would expect. Maybe some flagging to go on during this hour that I'm with you. And that would happen around the 141.59 and 140.81. So from an intraday perspective, this is a buying opportunity down here. Notice I do have my alert. I'm going to put it just about right there. And let's go ahead and replace that. All right. All right, let's move on to ES futures. Let's get up here. And I want to talk you through what we saw today, kind of, how I traded the open and so forth. So let's start with the weekly. All right. Again, on my YouTube page, folks, I do what's called a broad market analysis every weekend. So I send out charts, actionable, tradable charts that you can take a look at and kind of see my overall sentiment in the market. And I go over all of this stuff, okay? But really quick, I want to show you what I'm looking at far as this week is concerned. So let's go there. Inside and up formation. We came into demand last week. Notice that we pushed out of this. So again, inside and up formation. We got above that next level where it says bulls need a weekly close above here. Again, if we can hold above here, I'm looking for my next target at 40.82 by 41.31. Again, this is just a weekly candle, and a lot of things can change before the week. Let's go ahead and go into the daily. Let's go ahead and zoom in here. Notice that this chart, okay, this chart here, I'm going to zoom in. You guys know any edge or any line to the downside is demand on multiple time frames, and then to the upside, these are resistance until proven otherwise, okay? Notice that in this zone where it says short, trigger, and resistance, that's only if the lower time frame supports it. What I do is I quickly come over to a 5-minute. I look to see where we are on the histogram on the TTM squeeze, and there was nothing supporting for me to go short. Matter of fact, this is the level where I was looking at a potential short. But if you just draw a box and come down here, you will see the histogram, I call this trendy blue, is saying, hey, the buying pressure is there. We're getting into my next edge, but I'm not going to go short, okay? All right, so check out this. You guys know about the PMZ. This is one of our most popular indicators. This is for intraday traders. The idea here is just to go long over the PMZ. Our risk today was 3.25. I know it says 3.05, but we rounded up here and you can see the result. So your risk 3.25, looking for a target into 40.20, and we have blown past that and, gotten up into 40.50. That was actually pretty shocking from an intraday perspective after a 70-point move on Friday. But again, what helps you stay in this trade is probably the most important thing I feel like outside of supply and demand that I could teach you. So I'm going to measure this move right here that started this morning from the pivot low. Matter of fact, to hit our line in the sand to the tick, I'm going to come up to the high. And now we are going to identify this 23 and 38. Now, my methodology or Fibonacci, if you want to put that into play here, basically says if price can hold in here, that the trend that we are measuring right here is bullish on the day. Now, I commit to a candle. So just because, let's say that price of the candle falls back like this, flushes that, I wait for a close because a lot of time traders get stopped out on the wick or just the touch of a level just to see that things can turn around and end up looking something like this. All right. So this is what I'm looking for at the moment, just being really patient, waiting for the market to pull back. Some of the trades that I personally took today, I added in on some UAL. This trade right here, I'll talk about that here in a second because this was a really cool trade. And then here at Simpler, I had in the free room, we took AMD, and you could see I closed out of that trade up here at, well, sorry, that was a Google trade. Our trade was 180. Yeah, 180% we closed there. And I got out, really early. I mean, this thing ended up going close to $4, which is pretty crazy considering we got in around like 70 or 90 cents or something like that. So not bad at all. Anyways, as we're sitting here talking, check out how the price of the ES has already come down close to this 23.6, right? And it's kind of holding. This again is so important, folks. I want to draw it out. I know many of you guys have watched this before because so many traders have a hard time trading something that has gapped up or is moving too fast. Boom, this moves up. What you want to do at this point is you want to measure here at the pivot low, and then as soon as you start getting the down candle, okay, as soon as you start getting the down candle, go ahead and place that Fibonacci at the top, identify your 23 and 38, wait for price to come in, and then you got yourself a setup. You look to go long, look at your histogram, and then the overall trend resumes. Now, what if it doesn't resume? This is really important. So for example, if it doesn't resume, then this box, what I like to do is draw a box in here. This would be a zone, okay? And what we do and what I teach is that we wait for price to come into this zone. Again, looking at the histogram, we want to be careful. I like to see these things go red and then we get 2 yellow bars, okay? Now, if you don't want to wait for that, you simply take the trade here and I use a 3.25 stop, okay? So that's how this works in here on the ES futures, okay? Now, another thing, I use my blueprint to trade SPX and SPY. So let's get over here to the SPY trade because I want to teach you guys, a trade that basically went from being down to actually making some really good money. All right, so here it is right here. This is a SPY vertical net credit. So what I was looking at, okay, let's get over here on the ES futures. I only used the ES futures. I did not look at the SPY chart. We were coming into this area of resistance. Now, I'm a bull by nature, and it's really hard to take that out of my blood. All right, so I'm looking for demand zones, and I'm looking to buy those demand zones, and I'm looking to trim out at supply zones. Everybody, get that? All right, so because of that, what I like to do now for the most part is sell call credit spreads, okay? So on this move here, I sold in the money, okay, 399s and 400s. and I were to receive a 52-cent credit if I were right. My plan was to cover the credits in here for about 30-40%. That didn't happen. Matter of fact, what actually happened is that we started to get buy signals on my indicators, and I knew, hey, I'm probably wrong. Okay. So let's go ahead and scroll down. I want to talk over this so you guys can understand. Okay. So then we get to the point where I cover the short side right here. So remember, I sold the 399 and I'm long the 400. That was my credit of 53 cents or 55, whatever it was. So I buy this back. So what happens in my portfolio, I no longer have this and I assume the risk of the 400. When I bought this back, it was trading at about $1. So down here, we quickly get this beautiful candle to the upside, and then I cover for $1.70, making the entire trade very profitable to the upside. Now, this might sound confusing if you don't trade spreads, but just to give you some idea, I was 25% negative on my spread, bought back the short side, was only long the 400, and was able to profit off of that trade. Okay. All right. So the rest of the day, what I want to do with you here in the next hour is just talk about the potential of a setup. Like, what do you do on a day like today? Today can be super frustrating, okay, if you weren't in a long position, right? You guys feel me on that? If you were not in a long position and you don't like holding over the weekend and you don't like swings because 2022 really created that fear in your head, then you're having a really hard time, right? You're having a really hard time. I know you are, right? If you're not coming in long, you're faced with, do I buy up here? Well, I'm hoping that the Fibonacci that I just taught you can help you. All right. And then the next question is like, am I buying the top? This is why I think it's very important to understand the higher time frames. What happened in 2022 is that you created, listen to me, guys, this is important. I really need you to digest this. In 2022, what happened is that it created intraday traders. Okay? Intraday trade. Am I right? Most of us are looking for like really fast trades. So, what happens though when things gap up is for some reason we stall. I think it's just human nature, right? So we stall, we don't have a plan. And the market knows this. They give you a taste of intraday trading. It was fun. But then they start putting you in a position where if you don't know how to swing trade anymore, you're coming in and you're not getting the benefit of that move, right? The benefit of that move for me this morning was AMD, 200%, Google, 200% almost, right? Holding and understanding the bigger picture is what is important when these things start to phase out. That's the ebb and flow of the market. So from my position, what I always find really interesting is that right towards the end of an intraday type of trading environment, we start to slowly trickle into swings, right? So we need to be prepared and understand how to trade both sides of that. So for me, I'm always paying attention to the weekly charts here on the ES futures. Let me show you a couple key points here. The cloud itself, this is just an EMA cloud, is getting nice and tight. It's a really good visual. And it makes a lot of sense if you understand what's happening right now, and that is earnings. We're getting ready for earnings season, right? This is the Christmas of trading for me. So I get super excited. When this thing gets tight, we're either going to get a very big move up into supply, or everyone's going to disappoint and the market fades and unfortunately maybe gets down here towards 3,600. Those are the two options for me. Now, since we're holding above the cloud and we are currently going inside and up on the formation, I am anticipating right now, not speculating, just anticipating that this is going to create a demand level. Remember, demand and supply levels that I teach you are inside and down, and then somewhere down here, we have inside and up. I trade from zone to zone on a higher time frame, but I coach day to day from the standpoint of going long here and then trading up to here or going short here and covering down here. Right now, inside and up formation, again, as long as this 40-16 holds, I'm looking for a move into 82 and 31. The daily, as I said, it pushed right through the short triggers, through the edges. It's okay if it does that because the higher time frame says we have a long ways to move. Inside and down formations, very important to understand. These things work. They're awesome. Pretty easy to identify. If you don't know how to identify them, you can watch my 4-minute video. And something that, it cost me a lot of money to learn this stuff. And in 4 minutes, I could teach you how to find these formations. You're inside and down here. Boom. Price leaves. It fades. Price goes bid. It fades as supply. Okay. This supply zone right here, same thing. We have a new one. Inside and down. Price fades, consolidates, moves up, hits the supply, comes back down. Now we are testing supply for the second time. Notice that my resistance level is in line with the inside and down. This resistance, the question by the end of today, will this resistance be support? Okay. This chart, this is a 4-hour. Okay. This was my zones that I wanted to work with from a 4-hour perspective. Absolutely blew right through this, but that's okay because we have a plan. The histogram helps us. Do I want to be short up there? No. 5-minute chart. Let's keep it simple. Just went over this. We're pushing out of the PMZ. You go long. It's a mechanical approach, folks. It is the most mechanical approach that I've ever come across, and I'm very happy to teach it to you. Okay? Mechanical, meaning I know how much I can lose. I know where to go long. I know where my targets are. Execute the trade. Only if you're okay with the loss. Okay? Everybody understand that? Anybody have any questions? Let's see. PS Jake, Trendy John, are you putting on SPY credit spread, call credit spread based on the plan pick of ES that you posted pre-market? I did. So basically that's what I did. Okay. And then I was wrong. I turned it around and then made money out of it. Okay. All right. Let's move on. So notice right here, 23 is still holding. Okay. Yeah, it's how to identify inside and up and inside down. This is my big thing. If you guys go to my YouTube page, it's all of the different videos that have the yellow, what they call thumbnails. Those are the learning videos. Those are the most important videos in my opinion. Now I have people that binge watch all of it, which is pretty impressive, but just the yellow ones are kind of like the strategies that I use. And I've tried to make them really short and easy. So notice that we continue to push up here and those levels are working. See, we haven't closed underneath here. So for me, there's no reason to be short. But watch this. Even on a 5-minute, but here's my disclaimer. When I teach you inside and up and inside and downs, my job is to identify where institutions are buying and selling. When I show you an inside and up and inside and down formation on a 5-minute chart, this is not institutions. This is literally just a formation. Everybody understand that? And in this case, we have identified an inside and up here. Let's go ahead and move that 38.2, folks, just a little bit. And we have that zone right here. Okay? So what we're going to do is we're going to name this support. Remember that 40.35 was the 23.6. Again, if you're not an ES futures trader, it does not matter, folks. I'm trading my portfolio off of this. I literally. So if I'm like, hey, I would go long here. If I like AMD today, I like HD, LMT, whatever. I'm looking for the market to go bid in this area. Does everybody understand that or not? This is literally my livelihood. This we go over this every single morning. This is how I base my trading off of this, and then I pick my names from my scanners. I'm just looking for names that are trending and so forth. All right. So this is what's going on. So if I'm long, okay, so I could have made more money on AMD today, but if I'm long when I open up this morning, I want to give you an example. I'm not getting out of my position because this is my indicator. It's called the line in the sand. Okay? Line in the sand. It's not the cash close. A lot of people get confused. This is actually like a maintenance period, and it's really neat. The line in the sand creates a inside and up or inside and down during the maintenance period, which really helps us. If we're above it, we look for it to be support. If we're below it, we look for it to be resistance. Okay, so if I'm in AMD, I'm talking to myself and I'm like, I'm not getting out of this unless it closes below here. It goes bid, it goes long. And as we got up into what I thought could be some big resistance, I faded out of my AMD. Okay. Just so everybody knows. That's how I run my portfolio, right? Now, as far as like other long positions, if I have other long positions, I want to stay long during this time. Now, check this out. 5-minute charts, not institutional buying and selling, but just formations. This is, and I say this with a lot of confidence, this is the range that we could trade in. Okay. And again, what is our famous words that I like to use? If this, then that. If this, then that. Okay. This will help you from not speculating. Speculation is ego, folks. Like you're trying to call a market because you think it's going to do something. It really just fuels our ego. But if this, then that equation to the market keeps you from losing money a lot of times. See, this is a zone in here, right here, and it's a if this, then that. If price gets down to this zone, I'm looking for the market to pop. If price gets above this zone, fine. This is no longer resistance. Okay. So, right in this period, not only did we create two different opposing zones, but we actually, if you look, I'm Central Time, by the way, here in Florida. Okay. We came right into the euro close. It makes sense to me. Okay. All right. Everybody understand that? So that's a good question, Jake, but I want to make sure that you understand. I don't just trade off of inside and up formation. I trade based off of what? I'm showing you the weekly, the daily, the 4 hour. I'm getting my sentiment based off of that. I don't need to look. Check this out, Jake, and tell me if you understand it. Anybody else want to chime in? Please do so. I am taking my SPX trades off of the ES futures. The only thing that I need to know, okay? So listen up. The only thing that I need to know, I just froze my screen. I want you to pay attention to this. ES futures, when I froze my screen, is at 4,044. Down here, the SPX is at 4,027. Why is this important? Because if I'm using my ES futures to trade off of, okay, then I need to know what the numbers are. Did you know that around quad witching, options expiration, that type of stuff, the ratio falls off big time? And as weeks go by, these two numbers will actually start to get closer. Okay? So you just gotta kind of know that. So let me give you an example. If I were to think that that the ES futures could drop back to my edge at 40.20, what is the difference? Hypothetical, because I don't feel like doing the math right now. Maybe you guys just did it. Let's just say it's about 20 points difference. Okay. So I need to know that. Like, I wouldn't buy a 40-20 SPX put or try to pin something at 40-20 because the numbers are different. Okay. So I need to know what that number is. So just want to make sure everybody understands that. We did a SPX trade in here last week, and we did really well on that. So I just wanted to make sure we point that out. Okay. Yeah, so great question, Dog. Let me show you here in a second. Make sure I answered questions. Right down here. Before I move on, Dog, just really quick. So Jake, if we see this, all right, this is like, you know how like John and Cody, they're doing like the credit spreads and so forth, and they're using the quick hits. For me to kind of, kind of talk the language that you guys talk, I make this really straightforward. If we break above this level, then I could sell put credit spreads here. If I want to trade SPX to the upside, I want to stay in SPX as long as this is not candle does not close under here. Do you understand that? This is really straightforward, very mechanical. Okay, very mechanical. The cool thing is, if you notice, the risk is what I'm attracted to. Okay, I'm attracted to the risk. Can I deal with 3 points? Yes, I can deal with 3 points. Okay. One of my rules, anything over 5 points, I trade the micros if I'm trading futures. Just so you guys know, that's my rule because it gets a little weird. All right. Yeah. So what I said was if I want to sell put credit spreads, I do it on a close over the PMZ. My stop is a close underneath the PMZ. That's for SPX. So like when I took the SPY trade this morning, I told everybody, I don't care if you trade SPY, SPX, whatever. The plan is this. We're trading off of this blueprint. Very straightforward. Everybody likes different instruments. I'm just into trying to make money. And if I'm losing money, I want to try to manage it the best I can. Okay? That's the idea, right? Sometimes we break our rules. Nobody's perfect. Don't beat yourself up. Okay? All right. So, next thing that I want to look at, let's go ahead and take a look at what do you guys want to look at? You guys want to like take a trade? You know, I'm only going to take a trade if something sets up, but the fib tool. All right. Let me try to teach you this as quickly as I can. And just so you know, I have videos on this as well. I do things a little bit differently. If trend is trading sideways, right? I do not measure that. Let's say that the price of CAT moves up and then it starts to pull back. I don't care if this is on a daily, a weekly, a monthly. I will measure this and this, not this and this. And the reason why I don't do that is because I only measure trend. I do not measure sideways market. Does that make sense? Okay. So, sideways, boom, I measure. It starts to come back, I measure. Now, what is considered sideways? You could see it. Where do we get sideways action from? Anybody know? Where do you get sideways action from? You need to know this because guess what? It's going to keep you from losing money. When do we typically go sideways? This is super important. And I will go over Amazon here in a minute, Bala. These are the things you got to know, folks. Consolidation. Now, next question. When do we typically consolidate? Around lunch. Well, yes, but the bigger picture, what I wanted to say, after a trend run, 100% laser. After a big move, Mike, 100%. All right, I want you guys to write that down in your journals right now. The reason why this helps you save money. If you listen to me over the weeks or last week, I said that most cycles last 1 to 3 days. You can find that out by looking at a yearly chart, sorry, a 1 year span and looking at the daily candles. Everybody understand that? So again, look at the daily candles for 1 year and you just go back and you count them. That's it, folks. That's all you do. You just go back and count them. All right, so let's pull this up. This is TradingView. I get a lot of questions if my indicators on TradingView. They're on both TradingView, TOS. I like TradingView because of the mobile feature. You could trade from on the go, and all your levels show up, which is super cool. It's also super fast. So for example, let's see. Um, let's go to. I want to show you guys something. Actually, I was having this conversation. All right, this is important, so I'm gonna kind of veer off here for a second. There was some talk this morning about, hey, we're in a bear market. Now, my methodology is different. It's for me, for Trendy. I developed the idea of using the Fibonacci based on ranges and so forth. And the reason why I found this important is because you know that technique I just showed you, like how to measure from the ranges, folks, right? I just showed you that just a few minutes ago. So for me, if anything is holding above the 23 and the 38% of a move, right? I deem it as bullish. Everybody understand that? So if I come back, remember how I just told you how I measure ranges? Check this out. This is a range. Everybody agree? This is sideways. This is a range. Can you see that? Can everybody see that? So for me, what's relevant in 2023 is the measurement from this range here into this range. Everybody understand that? So this is the quarterly chart that we're trading off here. And this is what we're trying to stay focused on. Is that wick to wick or body to body? Always using the entire formation of Fibonacci. I'm not talking about supply and demand. Fibonacci. So if there was a wick out in this candle right here, Bala, like let's just say that it came down here like this, I would measure on that wick. Okay. What's important is you know how to identify the candles. Okay. So here, this is a measure of it. Okay. Now check this out. This is the range. Whoops. This is the range. So all I'm doing is measuring from here to here. So my discussion with some people this morning is, according to my methodology, we're in the bullish range, back in the bullish channel from 2020. And we broke above not only the cloud, but we also broke above the 38.2. I hope that resonates with you guys in some way, because the majority of the market is trying to short down here, and yet we are actually looking for demand levels. Let me show you something, right? We came into this level right here. What was that level? Let's click on this, go to settings, and we are going to go to normal. Okay, right there. And then we come over here to monthly. And it starts to get a little confusing, but let me go ahead and take this off for you. Check this out. I can't make this stuff up. That's the beautiful thing about supply and demand. It's always there for you before price actually gets there. That is the difference and the separation between everything else you learn and what I'm teaching you. The masses typically learn the same stuff. They really do, right? How many supply and demand traders do you know walking down the street? Not many, right? This right here, folks, is a double inside and up. This is a demand zone. So back in 2022, right before the end of the year, we came in basically to this level. Okay? You guys following? Amazon, Tesla, all the names, Google, all these awesome names that after 60% down, if you were thinking about shorting in them, you didn't realize that the market came into demand. But the news, the talking heads, were to lead you to believe that the market had more and more to go to the downside. This is why in my household, we do not watch news. Literally, I have no TV network. I have Netflix, I have Amazon, and those type of things. Okay. So we came into demand, we pushed up into resistance, and then when we come over here to the quarterly, I just showed you, right? Control Z. Let's do Control Z, Control Z, Control Z till we get there. Right there, we're above the 38.2. Pretty neat, right? So we came into demand. We stayed above the 38.2 now. My overall idea is every day that I come in is that we're actually pushing out of demand in a bullish channel. And so when I wake up in the morning, I want to think about getting long. All right, let's go over here. I want to show you this. This is Apple today. This was actually one of our focus trades. Same idea. PMZ, line in the sand, price breaks over. Your risk was only 18 cents. Now on equity, or not equity, stocks, we typically will take something like this and at least round it up to 25 cents. And if it's like Tesla where it's volatile, we go to 50 cents, right? If it's at 52 cents, we would go to $1. That's just how we roll with some of these names. Now check this out. Let's go over here. Same thing. Let's measure from the breakout into the pivot high. What I'd be looking for is for Apple to go bid somewhere in here. And the cool thing is if you know how to identify your fibs, then you can identify that these fibs are actually in line with our inside and up formations. Isn't that cool? So think about that. If you don't know where to place your fibs and they're all messed up, then your fib could be like on top of a zone, or it could be below it, and it could really mess up your results when you're looking at these. Okay. All right, let's go back over to ES futures, kind of see what our levels did. Right. This is not high in sight, folks. Look at this. I can't make this stuff up. This will help you out. Now, some of the things that helped you in understanding this particular chart was what? I helped you identify the inside and down. I helped you identify the inside and up. I told you about the time coming into the euro close or open, close, sorry, right? All those things are a factor when putting these blueprints together. Okay? Everybody understand that? We're good, right? Any questions about that? It may not look like a lot to you, but for a futures trader, from 45 to 35 is $500 a contract just from this little move and understanding how to identify that. Okay, so pretty neat. All right, let's go ahead and move on. And we'll see how price reacts down here. And AMD, just so you guys know, so for the free roam, I also, right after I pulled out of AMD, I was like, let's see. Right when I pulled out, I bought this idea here, the 80 by 85s for $1. But then I was looking at the market and I was like, I'd rather buy these again when we get a little pullback. So if we get a pullback, a little bit deeper correction here for today, I sold them right here. So this was like a roll. I will buy this again. So it was an 80 by 85. And this is how I trade earnings. All right. So I traded earnings for Netflix this way. And you can see right here, these made 70% on that trade. So I'm looking for a deeper pullback maybe to this zone here. We'll see how this reacts. If you know me, then I've learned the hard way. I prefer the deeper the drop. That's where I want to start looking at getting long. Now let's talk about the PMZ for a few minutes and maybe we can take a quick trade, or I can at least demo a trade for you by using some stocks in here. Okay. So when I look at my scanners over here, I'm going to double click on PMZ and you'll notice that the yellow ones are popping up and then we have red and we have green. The yellow just lets me know that price is inside a PMZ. Okay, very straightforward. Now, I'm not a huge fan of gold. It's just pretty lame to trade, but I do like the bigger picture this year, and I posted that out on my Twitter feed, and you guys can take a look at that. And I'm using a yearly candle to do that. Now, this is a PMZ. Basically, what I do is look for the scanner. I come up here. I go, hey, it's 22 cents of risk. I want to go short underneath it. I need to know where my targets are. You can see that there's an inside and up formation here. Targets to the upside, it'd be about right here where this inside and down is. And so I have to ask myself, and this is how I do each trade, is 22 cents, right here, is it worth taking a trade to here? 22 cents, is it worth taking a trade to here? If your answer is yes, you just execute the trade. Okay? Pretty straightforward. Now, I'm not trading gold, don't want to. I'd rather take a very long trade on gold. And I think, let's see, I want to say I did this on my trading view. So let's go over here. I could be wrong. Gold. And let's go to the year right there. Yeah. So yearly chart. All right. So if you follow me on Twitter, you would have seen this chart. This is a double inside and possibly up. I said that we would have resistance up around this level. And you could see that. I'm a huge fan of potentially taking this. I would much rather see gold over 182. Right now, I think we just flag for a bit on a higher time frame. I'd much rather see us be able to build value above 182 before I take the trade, or I'd much rather see it down here towards 160. So it's a if this, then that. It's not ready for me. I'm not ready to take the trade. Okay. Okay. Let's go ahead and keep on moving down. All right, let's see. The inside and up box doesn't look like it's measured the same as the inside and down. I'm not sure what you mean. Down here. Is this what you're talking about? KOD COD? Is that what you're talking about? This one? Oh, 5 minute ES. Let's go over here really quick. Doo-doo-doo. I have a really good video and a chart that I posted as well that you guys can look at. Um, Not all zones are created equal. That'd be my first answer to you. All right. This zone is created. This is an inside and down. That is not. So, first of all, just so that everybody understands, you don't need to do this, but I just want to make sure you guys understand. We go to appearance. I use what's called a candle trend. Okay, that's the big difference. So if you're new to trading, it probably looks a little confusing. So filled candles are down candles. Hollow candles are up candles. The filled candles close at the bottom and the hollow candles close at the top. Okay, that's the first thing. All right. So just know that. So this is actually an inside and down. And when I look down and to the left, this is a double inside and up. Okay. Now this zone itself, if you remember, what I did was I combined Fibonacci with this level. Technically, okay, the zone is actually this wide. Technically. Okay. All right. So we're just staying patient. Again, you don't go long up here. That makes no sense. And down here is where I'd rather think about going long. Okay. So I'm being patient. This is the part, in my opinion, because I get to watch a lot of traders, this is the part where people speculate, okay? Like almost all the time. For supply and demand traders, we wait for our levels before we execute most of the time. I mean, we're not perfect, right? So that's what's going on there, okay? All right, let's move on down. I've been eyeing HD, all right? Now, from a yearly perspective, it looks like a short to me. It really does, down to like 290, 270 level, which is kind of weird because I love Home Depot. Makes me feel weird to think that I want to short it like that. But what I'm paying attention to is the yearly chart. And I just want to show you guys this and why it's so important. And matter of fact, let's go ahead once again and bring over TradingView because it's so much quicker. And let me show you. All right, this is a 1 year. Let's go ahead and move drawings. Boom. Okay, so why is this important to me? Well, the first thing that I see is an inside and up formation that was actually tested right here. So we created the inside and up formation in 2019. We tested in 2020. That zone worked really well. And if you took this zone from a higher standpoint, it moved from 195 into 416. Now, where my eyes are on this chart is below the body of this previous year. Okay, this is like my line in the sand, if you will. So if we come under here, let me use this magnet. If we come under here, this right now is that line in the sand. HD is having a hard time getting back above the body of 2022. Now, where would this lead us to? All right. Now, this zone was already tested. So what I want to do is actually come up here and I'm going to measure the range right there. Notice we're at the 38.2. That is absolutely crazy for me. All right. And if you're into this stuff, then you get it, right? This is where we geek out a little bit. It's like the 38.2 is, basically synergistically leveled up with this level. And it's a super strong level. All right. My idea here is we have earnings coming up, right? Long term, I feel like I want to be short, down into this level down here towards, like I said, 290, 270, 250 in there. Notice how the cloud is confluent with 248. So what I'll do, just like I did with Netflix, is I would prefer a long-term put debit spread to get me down into here. And then short term, I'd buy call debit into their earnings, identifying one of my levels to the upside. It's a pretty cool strategy that I've been using for several years. And the idea is that, you're hedging with your short term and it pays for the long term. It's a really neat strategy. I won't go too much into it, but that's what I'm looking at right there. The next thing that I want to look at is China names, BABA. All right. So let's get over here and look at a smaller time frame. I love Chinese names. A lot of people don't. I like the volatility in them. I like how they gap up, especially if you're buying into a demand zone. It kind of works out. You could see up and to the left, we have topping wicks. So we're getting close to resistance. Okay. And the way that I want to look at this trade is potentially looking for 125 this week. We're currently at 118. And I don't want to go short this name um, during earnings season. Like I just don't. It doesn't make sense to me. Okay. So if I'm measuring here, I actually want to go long on a pullback to 113 to about 116. So I'm going to be really patient with that. So if you guys see that come across the radar and I end up trading it, you know why I took it. Okay. All right. Let's see. Next one, I'm looking at UPS, FedEx, and I really want to take my time. Meta, I gave you guys that long-term trade, and it's really been doing really, really well. I closed it out for just under 10%. because I thought about it, looked at my portfolio, knew where I wanted to be. But it's really been taking off. It's been doing really well. So if you guys are still holding that, I think we had bought like 60, 70, 80 days out. That guy is still doing good. And if you're interested in it and you want to see more on it, I would go to the weekly. For me, it's gone from red to white. So there's a momentum change. We are above these EMAs. And my next target is up here towards 155 to 160. Also, notice here on the histogram on the weekly for Meta, it looks pretty good. I like the way that it looks. There's some room here, folks. So the question is, after two consecutive big move days up in the ES, do we want to wait for it to come back a little bit? I think so, instead of trying to buy it up here. All right, just my 2 cents. So that is what I'm seeing there. And then I think I had a question just a little bit earlier on a question matrix. I'm sorry, I saw go short here. So the idea, yeah, it was to short the zone up there at the top. Let's see. I thought somebody asked for a chart. Do you guys want to see anything really quick, like any sort of charts? You got to understand. Like for me, I came in with a position, so I'm really happy kind of where I'm at right now. I do want to take a SPX trade, and I'll talk about that here in a few minutes. Um, Actually, let's do that right now. All right, let's go back to the ES futures. Same kind of trade I gave you last week over in the futures room. I'm being very patient. I'm waiting for my zone. All right, so check this out. This is my plan. Now, I like to buy these for about 35 cents or so. Sounds cheap, but they can really run. So what I want is to buy SPX to move up here. Okay, so from here to here is about 15 to 20 points. So when price gets down to here, I want to execute butterflies for up here. Everybody understand that? That is my plan. That is, I'm foretelling. I'm letting you know, just like I did on the last trades. I'm waiting for price to come down. I'm staying patient. But what if it doesn't come down there? I don't take the trade. I just don't care. All right. I got a lot of videos. You're gonna have to look at the ones with the yellow background. Those are my study videos. All right, guys. So everybody understand that plan? I'm waiting for price to come in this zone, and then I'm looking at executing up here. The point difference right now, here we're gonna have to do. Let's look at the SPX. Let's freeze, control 2. 40, 20, 40, 37. So about 17 points. Okay. So 17 points off of this. So it's 45, okay, minus 17. So we come over here, 45 minus 17 equals 28. So I'm looking for 28. So 25 by 30 by 35 is the type of SPX trade I would put on. 25, 30. And I do them tight because I like my levels. 25, 30, 35, just like that. And let me write in here SPX butterfly. Okay. So for me, I'm not going to do anything unless price comes down here. All right. So kind of like let it do its thing for right now. All right. Yeah. So great question, Danger Will Robinson. There's a couple things you could do here. 1 second. Okay, never mind. If So remember, I like to look at the histogram. So I want you to look at this on a 5 minute chart. What happens if price starts coming down? The histogram will start to fire, not fire, but you'll start to see these red bars. Okay. Now the idea is that we'll red bar all the way down into the zone. And then if it keeps dropping and this doesn't look like it's ready yet, wait for the yellow bar. Once I start to see that yellow bar, it'd probably be right around this area in here. That's where I would execute the butterfly. So again, I'm paying attention to the histogram down here. Does everybody understand that? Um, I'm very like particular about my zones. A lot of amateurs who first start out will just buy a zone and they get ripped to pieces, just to see price like turn around and go in the right direction. So we have a process around that, um, and that's what I teach. All right, so I'm very patient, if you will, down here. Okay. Even games up today, man. $2.50. Google's looking pretty good. Goldman Sachs looking good. HD, we just talked about that. Myrna, don't even want to look at that one. Let's see. We had MGM in here not too long ago. I'm trying to find something that let's look at. This is actually really important. Let's go. I'm going to create an alert here so I don't forget, by the way. Always set your alerts, guys. It's so frustrating when your plan comes to, it happens, but you forget about it. Yeah, Nvidia up 11, but here's the thing. Let's look at SMH. Okay. SMH is up 9 or 4% today. Okay. Yeah, it would be 0 GT, Mike. Yep, sure would. Now, this is so I opened this right away and I must have done this blueprint a long time ago and we're hitting a target. So that's my first yellow flag. All right, but let's go to the bigger picture. Oh, boom. Okay. So you can see right here, we've gone from red to white to green. Nice momentum change. We broke over the EMA cloud. We held what was resistance, was support today, but we're hitting this level here. Okay. And the ES futures are backing off, and I'm wanting them to come down a little bit. Now, a lot like today's zone, this is my actual trendy edge. That's my actual target is 242. What I would do is measure from today's candle. It doesn't have to be perfect, folks. I'm not into being perfect because if you do that, you're really setting yourself up for bad expectations. All right. So let's go 23 to about the 50. Okay, right there. And so this is what this would look like. Okay. And it'd be about the same as SPX today. So if we could get a little bit of a pull on the ES, back into that zone, this is where I'd expect NVIDIA or SMH to come and then pick up. Now, I can tell a lot by my AMD trade that I took, by looking at NVIDIA, TSM, all those different things. You can gauge from this chart here on SMH. Before I end here, remember in 2022, this thing gave you, let's go over here and let's create a chart really quick. And let's just say, what is today? January 23, like this. Okay. January 23. If we go to the quarterly, back in 2022, at the beginning of the year, the inside and down formation told you right away to be careful. It's pretty cool. I was at my buddy's hedge fund, and I looked at this and I looked down into the left and I said, man, this thing looks like it wants to go down, we took this range here. You come up and measure, and you can see we even flushed the 618. Now, this level is really important. Why? Because this is back in the bullish zone. I think this is going to be resistance around 241 or so. All right. Now that 241 again is that target that I just gave you. So I do believe that SMH still has some room to run. The question is, do you want to buy it 2 days, with the ES screaming like it is? I just feel like your risk to reward's a little skewed. Now the bigger picture, if we get over this level, we're headed back to supply 269. So if SMH can move to 269, where does that put AMD? Where does that put NVIDIA? And these are the kind of things that you want to be thinking about. And that's how I use an ETF to trade. Okay. So again, this is AMD. Our target for the room here, guys, just so you all know, was right here at 76.33. Notice price came very close to the target and then we peeled out. Okay. So anyways, I appreciate you guys. Usually we trade a lot more, but again, came in, things were healthy. I think right now, risk to reward for me, I'm waiting for the pullback to buy that butterfly. Other than that, I'll catch you guys another day, another time. I really appreciate you. Hey, T Camp, I think you've I mean, why do you keep bringing this up? Like, what is your point, dude? All right, can you guys hear me? So you can see that session. I forgot that I have my stream going. So if you guys were over there, you could see that there as well. So I was really looking for it. So my plan was on a pullback. If we could get into the ES zone, was to buy SPX again, just like we were doing. Cool, cool. Right. Hmm. Well, did you ask those two questions? So to use the composite material, I saw that, but if did you ask the two questions? How much is it for the composite to cover all of this? How much was it for the wood? Minus those, if that's coming up with 5,000+, then we have our answer. I'm kind of curious, what did he put into the budget to cover the deck with? You know what I'm saying? I mean, it could. Yeah. Hey, T Camp, if you're on audio, dude, you got to stop. It's getting old. Seriously. I don't think anybody appreciates your input now. It's like getting frustrating. I mean, people are making money, people are having a good time, and you keep bringing this up, dude. Like, how many times you got to bring it up? I think we all understand. I even validated what you said earlier. Huh? Water, please. I think a bottle. Yeah, thanks, baby. Literally, so many people doing well, and we're going to talk about why we shouldn't be to the upside for the last 3 weeks. It's just like a mute point. Literally makes no sense.